So we wanted to just start by talking a little bit about mergers and acquisitions and the market activity right now. I'll talk a little bit about the Main Street market, and then Doug's going to talk about the M&A market activity. On the Main Street, deals under $5 million, it's been a very active market. It's probably the most active we've seen in most of our careers, especially since 2008. It's very much a seller's market right now, meaning that people who are selling their companies are getting higher multiples and higher prices for their business. And there's a couple different things that are playing into that. Time to sell is also dropped, which is a big metric for people looking to sell, like how long is it going to take to sell my business. I do see in the Main Street, we're on the verge of switching to a buyer's market sometime soon. That's my don't hold me to a date prediction. But there's a couple things that are going to happen in our market space. And one, Kevin and I were just talking about, is interest rates are going up at some point, and that is going to limit the access to capital and increase the cost of capital for a lot of buyers, which inherently lowers the amount of money that's available to buy for a business, which will lower prices. The other thing that we've all been waiting for, I don't know, 5 years now, is this baby boomer retirement wave. So in our industry, they call it the seller's tsunami, but there's about, I think it's 10 trillion in assets that are tied up in 12 million privately owned businesses owned by baby boomers. So when they do start to retire, there is going to be a mass exodus. The prediction right now is that 70% of those businesses will either close or sell, because a lot of the millennial generation does not want to do what their parents did. They don't want to take over those businesses. So, it's supply and demand, very simple business terms. So if we have an increase of supply on the market, it'll kind of transition that to a buyer's market as well.